Councillor Hamill. So we'll bat on. There's not a lot today, but I actually did want to unstar 6.1 to ask a question. Are there any conflicts of interest? Excellent. Would somebody like to move the start item? Moved, Councillor Young, seconded Councillor McDonald. All in favour? Carried, thank you. So 6.1 is just the monthly financial report. Jackie, hi. So Jackie, I just had a question which I was hoping you could answer, and it's in regards to page 22, and clearly the city currently has a not insubstantial amount of cash on hand, and clearly the report indicates that interest income is going to be increasing above budget over the next 12 months.
Correct, yes.
I was just wondering if you could refresh me as to what the constraints the city has in regards to where it can invest those cash funds.
Yeah, sure. So on page 26 of the report, right down the bottom, there's a footnote that talks about cash assets, including investments, and the reserves that comprise of that cash. So you'll see there we've got infrastructure charges reserve, so 345 million, which will be for future LGIP. The investment fund reserve of 110, which will be for economic development initiatives. And then the Gold Coast water and waste reserves of 211.6 million, with the balance being there's a strategic priorities reserve as well of 118.9 million, and the balance being your equity, your retained surplus.
Yeah. So what is the constraint? So I appreciate that there's constraints in regards to LGIP and quarantining of the cash.
Yeah.
What's the actual constraint in regards to where the city can invest those funds? Are we constrained to just the Queensland Queensland Treasury?
No. We actually, our investment policy allows us to invest across various financial institutions. So depending on their credit rating, we spread the risk across multiple financial institutions, but depending on their credit rating. So we've got money invested with Westpac, with Commonwealth Bank. Yesterday, with the increase of rates that have come in last week, we put about 50 million with Westpac for 2 years at 4.5% per annum. So that was a good result for the city.
And do they have to be Australian financial institutions?
I believe so. I'd need to confirm that, but I believe so.
And do we have an officer, or who is the responsible officer in regards to that treasury function?
The responsible officer is myself, and we also have a coordinator of financial accounting that oversees the treasury function, and there's a treasury officer, a level 7 treasury officer.
Okay, great, thanks. Councillor Gates.
I don't know if I'm guessing, but I'm thinking where your mind is perhaps we're not able to reinvest borrowed funds that we borrow for a lower interest rate. We're not allowed to reinvest those funds for a higher interest rate, are we?
Look, there's unders and overs. So if we go borrow money and we don't
arbitrage,
yes. Yes, that's a great question. So when we go and borrow money, we have to look at our liquidity and our cash flow requirements. So there's a large amount of expenditure towards December, which we factor in. We need to factor in the weekly payroll and all of our creditor payments. So we make sure that we've got enough cash on hand to meet our commitments, and whatever's surplus to requirements, we invest. And at the moment, we're really trying to be proactive in this space, get the highest interest rate that we can. We've even done some more sophisticated cash flow modelling to look at, we know that there's going to be a large amount of capital that goes out in December, but hey, we can go and invest at a higher rate for 3 months. So we've actually just locked away some money for 3 months as opposed to 1 or 2 years.
Yeah. So and clearly I don't have a problem with us doing that. So the arbitrage I don't think is necessarily the business we're in either.
No.
Because ultimately, so the fundamental question was, how do we manage the risk of those cash reserves? And if we're spreading it across Australian financial institutions and chasing return based on time and rate, that's fine. Does the Queensland Treasury have any oversight of the city's management of those funds, or is it just part of our annual request for loan borrowings?
It's the latter. So Queensland Treasury don't have an oversight over what we invest with other financial institutions. As the CFO, I have to make sure that what we're doing is in accordance with our investment policy and that we're spreading our risk and that we're meeting our liquidity requirements.
Yeah. And I think that, so is it 25 million or something like that we were looking to get in interest this year? Yeah, so I think the challenge is just managing the difference between that little bit more income and whether or not it provides us with any more exposure or risk. Because I think it was probably 6 or 7 years ago that, from memory, it was the Macquarie Bank that had some issues with some of its instruments that it was using. So I suppose I was just cautious in that space. Councillor Taylor.
Thank you. And I suppose the question is, any of our loans that we've got at the moment, what is the, say, an average rate of those particular loans? Obviously, different loans would have different variables. And the second part of the question would be, if we have cash, are we able to pay down those loans, but if ever needed, redraw back out, or is once a loan paid, it's maintains that particular limit?
Okay, so when we draw, through the chair, when we draw down a loan, it's a fixed rate at the time of borrowing. So the current QTC borrowings rate is approximately 4%. And we drew down $116 million on the 15th of June.
And Darren, sorry, Councillor Taylor, we basically only draw once a year, which is right at the end of the financial year. Yeah, and that was at 4.6% at the time. The rates are moving quite a bit at the moment, and we're proactively monitoring that. So we are going to be doing a review of our debt to look at whether, like you suggested, whether it's worth using some of our cash to pay down the debt, but there are going to be break costs and things like that that need to be considered in those decisions. And Councillor Taylor, I think traditionally it's been the break cost that's prevented us from doing that. So Queensland Treasury, for example, doesn't operate a offset account like you might have with your home loan. Correct. Unfortunately, but the city does have now, which we established a couple of years ago, a line of credit for 100 million. 100 million. We have a working capital facility of 100 million to assist with liquidity, but we also keep the cash. Which I don't think we've ever drawn on, have we? Oh, we've done it once in the last few years, and it was only a small portion. We like to keep some cash on hand rather than access that, because that comes at a cost. We do have to pay interest on that. Yeah, and when you say cash on hand, you mean like free cash as opposed to the $1 billion that we have on hand? Yeah. Yes, that's correct. Right, councillors, I'm happy to move it. Seconded, Councillor Gates. All in favour? Carried. And I forgot to star it, but I'm going to move 6.2 because the retirement of a policy is a good idea. Seconded, Councillor Taylor. All in favour? Thank you. Thanks, Jackie. Councillor Hamill. Welcome.
Welcome. I was here a minute earlier than last time.
Councillors, is there any general business? Excellent. Well, let's call it quits at 9:12.